You wrote about the Fed recently, and you talked about, kind of explained how the Fed works. So I'm curious what you think is the biggest public misunderstanding about the Fed's function.
Well, right now it seems to be the idea that lower interest rates are a reward for good behavior, right? If you listen to Trump, listen to some of the Republicans in Congress, they're saying, well, we should have lower interest rates because the U.S. economy is doing great, and that's a disputable thing. But that's not how it works. The interest rates are there to manage the economy, to keep it not too hot and not too cold. And if the economy is running hot, that would actually be a reason to raise interest rates, not cut them. So I think the biggest misunderstanding is people seem to have lost sight of what the Fed's job is and what interest rate policy is supposed to do.
And so how would you characterize the economy right now, and what do you think the Fed should do?
The economy is, very definitely confusing right now. I mean, if we look at the normal indicators, we'll get some jobs numbers on Friday, but unemployment is still kind of low historically, but a little higher than it was. Inflation is a little bit elevated, but not much. That would mean, depending on which of those indicators you look at, that would say that rates should go either down a little or up a little. No strong case for a move. And this morning's GDP numbers are full of noise because of the tariffs and all of that, but do seem to show a slowing economy. But we don't know whether it's slowing enough. Yeah, if you want to look at those numbers, you really, the rush to import stuff in the first quarter and then drop off of imports in the second quarter really distort the numbers. So everybody I know is averaging the 2 quarters, and they show an economy that is slowing down, but not really at stall speed. And I should add that we don't know, what is the appropriate rate of growth for the U.S. economy, given that we think that we're having large-scale deportations, and leaving aside all the other issues there, how fast can the economy grow with a labor force that's probably going to be growing much more slowly than it has in the past? So all of this leaves you with no clear case for moving at all. You can make that argument, but anyone who's confident about the correct move on interest rates, I think, isn't paying attention.
Paul, at the same time, there are economists who would argue that the Fed sort of needs to remake how it does what it does in certain ways, whether it's looking at different kinds of indicators. We spoke with investor Nancy Tengler, for example, the other day, and she pointed out, as many have, the transitory mistake that the Fed made, and that it has made other mistakes in its interest rate policy. So would it be valuable to sort of look at the methodology of the Fed and look for some reform there?
It's really hard to pin it down. And by the way, it is worth pointing out that the Fed was basically right that inflation was transitory. It just turned out that transitory was a much longer period than before. But the Fed believed that we were experiencing supply disruptions and that inflation would return more or less to normal once the disruptions went away, and that there wasn't going to be a need for a recession. They were right. It's just that instead of going away by late 2021, as the Fed thought, inflation peaked in mid 2022, but then came down painlessly. The immaculate disinflation was actually that was a confirmation of transitory as a concept. The trouble was they got the numbers all wrong, but people who were harshly critical of the Fed, saying it got behind the curve and we were going to be stuck with high inflation and we would have to go through years of high unemployment, they were completely wrong. So where is the Fed is human. There are some pretty smart, well-informed people operating from the same imperfect data as the rest of us. I don't see that there's an obvious failure of the Fed on the order that would say that they need to fundamentally change how they do business.
And then, of course, we have to talk about the political pressure as well. Of course, President Trump, again, tweeting about the Fed this morning. At the same time, it does feel like President Trump and Jay Powell are at kind of a détente at this point. Do you think the Fed's independence is really in jeopardy, or is it just sort of theater that allows Trump to try and blame Powell if the economy does start to weaken more?
Well, if Trump could get away with replacing Powell and politicizing the Fed, he probably would. I mean, I think he's probably been advised that the markets would go wild if he tried. And let's remember that Powell will be stepping down. It's scheduled his term is scheduled to end. Now, it's the Fed is not a one-man show. And the Open Market Committee, which is what actually decides interest rates, is a bunch of people, and they probably will not go along with big interest rate cuts unless the economy really seems to warrant it. But the intention of politicizing the Fed is really pretty clear. It's pretty clear that if Trump was not facing fear of market reaction and if he wasn't facing political constraints, that he'd be doing a kind of Turkey-style economic policy where Erdogan went and said, I know monetary policy better than those central bankers and didn't change his view until inflation hit 80%.
Right. Yeah, well, we'll see how it plays out this time. I mean, as we know, there's a bunch of people who have been talked about, speculated upon as potentially being nominated to take over for Jay Powell. Who do you think would be the best pick of those?
I mean, if it's actually somebody, Chris Waller is the internal pick, and he's a reasonable, or has been historically a reasonable, well-informed guy. As for the rest, I don't think it matters. There's the two Kevins. There's whoever Trump picks. If it's not that he succumbs to orthodoxy and then picks a Fed insider, it's going to be somebody who's going to take orders from the White House. So he could pick anybody. I mean, and it wouldn't make a difference. I don't think it matters whether it's Kevin Warsh or Kevin Hassett or the My Pillow guy. If it's a Trump pick, it's going to be somebody who takes his orders from the White House.
Paul, I do want to switch gears and get your thoughts on trade, because I know you've been writing about that a lot recently as well. We learned this morning that the tariff on Indian goods was going to be 25%, which is pretty much in line with the previous plan. There was the EU framework that was agreed upon, of course. As you know, when we look at the markets, they've largely been ignoring the trade headlines as of late. Do you think that's ultimately a mistake?
Well, the thing to say about that is that while I think that the trade policy is really bad and it's going to make us poorer, you do want to have some sense. I mean, economists, for a variety of reasons, tend to make protectionism a bigger deal than our own models say. I mean, if you run, the Yale Budget Lab has done an estimate of the long-term effects of the Trump tariffs as they now stand, and actually I've done my own estimates, and they came out exactly the same, which is that GDP will be 0.4% smaller in the long run than it would otherwise have been, that's a lot of money, but that's not catastrophe. So it was, the fear was that uncertainty, this tariffs on again, off again, would cause a recession. But if we think that, Trump's other policies are very pro lower taxes on corporations, lower taxes on the wealthy, higher taxes and reduced benefits for the working class. That's not good for the American people, but it's possibly good for the stock market. So I don't think it's crazy that stocks have held up. They seem to have concluded, maybe correctly, that this thing is going to settle down. We're back in a world of high tariffs, but the economy will be a little bit poorer because of that, but not Great Depression level.
And while we're talking about where stocks are going, I know you recently talked about the AI boom and compared it to the dot-com bubble, which is a conversation we have a lot here. It feels like AI, not in the stock market, but in real life, is starting to bubble up more and more, right? We're starting to see it affects things like hiring. Do you still see it as a bubble, or how are you thinking about it?
I mean, both can be true, right? Remember that the dot-com stocks were a bubble. Pets.com is no longer with us, but the internet, online shopping, online remote work, all of that happened. So it turns out that the internet was a very important technology, not as revolutionary as it was sold as, but it has made a big difference. But most of the companies that people thought were going to make vast amounts of money off the internet didn't, though there were survivors. So Amazon is there. But so I think it's quite possible both to believe that some of these stock prices are crazy, and to believe that what we're calling AI, this is actually a bad name for it, but what we're calling AI is in fact a seriously important new technology.
Paul, what should we call it?
Well, it's actually large language models. If you really talk to the people who are at it, right? This is what it really is. It's not thinking. It's basically the answer it gives is kind of a statistical prediction of what people who know something about a subject would say if you asked them. So it's not. It's more like a summary of conventional wisdom than it is like a new thought process. Although it does some things like coding that get closer to that, but it's this is not Skynet. This is not a machine that is doing what we do. But on the other hand, a whole lot of jobs are really not deep thinking either. So the idea that there could be significant job displacement is not silly. And I've talked to lots of people on this, and my conclusion from that is that decide what it is you want to think about the impact of AI, and you can find an expert who will confirm it. It's just all over the place.